Hello, ladies and gentlemen. Thanks for standing by for Qudian's Incorporated's first quarter 2021 earnings conference call. At this time, all participants are in listen-only mode. After management's prepared remarks, there will be a question-and-answer session. Today's conference call is being recorded. I will now turn the call over to our host from Qudian. Please go ahead.
Hello, everyone, and welcome to Qudian's first quarter 2021 earnings conference call. The company's results were issued via newswire services earlier today and were posted online. You can download the earnings press release and sign up for the company's distribution list by visiting our website at ir.qudian.com. Mr. Ming Luo, our founder, chairman, and chief executive officer, and Ms. Sisi Zhu, our VP of Investor Relations, will start the call with prepared remarks, and then we will open the call to Q&A. Before we continue, please note that today's discussion will contain forward-looking statements made under the safe harbor provisions of the U.S. Private Securities Litigation Reform Act of 1995. Forward-looking statements involve inherent risks and uncertainties. As such, the company's results may be materially different from the views expressed today. Further information regarding these and other risks and uncertainties is included in the company's 20-F as filed with the U.S. Securities and Exchange Commission. The company does not assume any obligation to update any forward-looking statements except as required under applicable law. Please also note that Qudian's earnings press release and this conference call includes discussion of unaudited GAAP financial information as well as unaudited non-GAAP financial measures. Qudian's press release contains a reconciliation of the unaudited non-GAAP measures to the unaudited most directly comparable GAAP measure. We also posted a slide presentation on our IR website providing details on our results in the quarter. We will reference those results in our prepared remarks, but will not refer to specific slides during our discussion. I will now turn the call over to our CEO, Ming Luo. Please go ahead.
Hello, everyone. I would like to thank you all for joining us on today's call. We kicked off 2021 with a solid first quarter. We greatly improved the quality of our assets while maintaining prudent operations of our cash credit business in light of the ongoing shift in online lending regulations. Notably, we recorded a net profit of 478 million RMB for the first quarter, compared to a loss in the first quarter last year. Our net assets increased to 12.4 billion RMB, and we had approximately 7.3 billion RMB of cash and cash equivalents and short-term investments at the end of the first quarter. Our strong balance sheet allows us enough funding to invest in new business initiatives, which we believe will increase long-term shareholder value. We are very excited about the meaningful progress we have made with our early childhood education business, Wanlimu Kids. In January, we launched our very first Wanlimu Kids Center in Xiamen, where our company is headquartered. This center occupies approximately 4,600 square meters. Early feedback has been positive, and we are going ahead with our plans to expand our nationwide footprint in China's large, undeserved early childhood curricular enrichment market. Our mission for Wanlimu Kids Club is to help Chinese kids grow up happy and healthy. We hope to help kids explore their potential in sports, art, and music cheerfully and freely, while also helping children build healthy bodies and minds parallelly. We firmly believe in the great potential of curricular enrichment for young kids in China. We estimate that there are currently about 160 million kids between the age of 0 and 9 in China, and we expect the penetration rate of extracurricular enrichment services as well as household spending in this area will grow. Wanlimu Kids business in the world to redefine kids extracurricular education. We consistently strive to differentiate ourselves from others, and we believe Wanlimu Kids' value proposition for parents and kids is very clear. Firstly, we guarantee a hassle-free refund policy as opposed to non-refundable lump sum prepayment required by many other institutions. Secondly, we provide comprehensive program offerings in one place to affordable prices, saving parents the time and money spent in taking kids to different places. Thirdly, we have well-trained instructors in each of our centers with standardized teaching procedure, and we also have a centralized teaching, research, and development team. Last but not least, we provide state-of-the-art high-tech facilities to create a safe and comfortable environment in each center. With our first-mover advantages, we build strong entry barriers in two aspects: location and talent. There are limited good and convenient locations near core urban residential areas, and once we secure the right of use at these locations, others cannot easily find a similar location there. On the other hand, as talents are at the core of this business, we have attracted over 50 excellent entrepreneurs who have run education business with annual revenue of over 100 million RMB to join us as equity partners. Specifically, our active partners will actively participate in our frontline business operations. Our senior management team and employees are highly motivated and share the same vision, adding critical value to the success of this new business. In conclusion, as we venture further into 2021, we remain cautious in our credit loan business operations, striving to develop our early childhood education business. I'm also happy to share with you that we had our internal kickoff meeting today, attended by over 800 employees and core management teams, marking Wanlimu Kids' official move to the national stage from Xiamen. Backed by our shared vision, we look forward to joining hands with our core management team and employees to build a nationwide extracurricular platform in China to help tens of millions of kids grow up happy and healthy. Now, I would like to turn the call over to Sissy for more details on our results.
Thank you, Ming, and good morning and good evening, everyone. As Ming mentioned, in order to navigate evolving market dynamics, we maintain our conservative approach to operate our loan business by rigorously assessing credit risks of new transactions. Consequently, we experienced an 8.4% decrease in transaction volume for our loan book business for the first quarter of 2021 compared with the previous quarter. Our strict credit approval standards continue to pay off during the first quarter with a further sequential decrease in our delinquencies. In particular, our D1 delinquency rate for loan book business fell to less than 5% at the end of the first quarter of 2021, a normal level in our operating history. Moreover, our balance sheet remains strong and healthy, enabling us to safeguard the interest of our shareholders. Additionally, more than 98% of our outstanding loans were funded by our own balance sheet loan transactions, and our M1 plus delinquency coverage ratio remained at 2.7 times. Echoing Ming on our early childhood quality education business, we are actively progressing toward our goal of becoming a comprehensive one-stop service provider for early childhood extracurricular enrichment programs. Our Wanlimu Kids project offers numerous top-quality sports, arts, music enrichment programs for children from ages 0 to 9, such as swimming, basketball, football, and dancing, etc. Following the effective opening and operation of the Xiamen Taizihui Activity Center, our first endeavor in the early childhood education market, we are designing more than 80 additional activity centers to replicate its success. Boasting solid financial strength and a superior team of education industry veterans, we plan to broaden our early childhood education services across the country with a mission to help Chinese children grow up happy and healthy. The incremental spending in our Wanlimu Kids business may put pressure on our profitability in the near term, but we believe we are well equipped to tap into the opportunities in the fast-growing extracurricular enrichment market in China. Following the completion of loss-making ramp-up period, we anticipate that the unit economics, or UE, for the Wanlimu Kids club business will be very attractive. The UE will be superior to that of many other offline businesses because, number one, being large long-term traffic generating tenants, we can enjoy lower rents compared with smaller institutions. Number two, we can enjoy lower user acquisition costs due to the variety of SKUs being offered and because of strong word-of-mouth referrals, as evidenced by the fact that over 50% of our traffic for the first center were from referrals and natural walk-ins. Having said that, we have a concrete plan to expand across China this year and hope our investors could stay with us and enjoy the great journey ahead. Going forward, we will keep a close eye on regulations in the online lending industry and proactively take adaptive measures in the rapidly changing environment. Supported by our adequate cash resources and strong financial position, we believe we can continue to grow our overall business and deliver sustainable value to our shareholders over the long term. Now let me share with you some key financial results. In the interest of time, I will not go over them line by line. For a more detailed discussion of our first quarter 2021 results, please refer to our earnings press release. Our total revenues were 515.7 million RMB, or $78.7 million, representing a decrease from 958 million RMB for the first quarter of 2020. Our financing income totaled 362 million, representing a decrease from the renminbi 623 million for the first quarter last year as a result of the decrease in the average on-balance sheet loan balance. Loan facilitation income and other related income decreased by 97% to renminbi 12 million from renminbi 422 million for the first quarter of 2020 as a result of the reduction in transaction volume of off-balance sheet loans during this quarter. Our transaction services fee and other related income increased to RMB 50.6 million from a loss of RMB 150 million for the first quarter last year, mainly as a result of the reassessment of variable consideration. Sales income and others increased to RMB 62.5 million from RMB 7.1 million for the first quarter of 2020, mainly due to the sales related to the Wanlimu e-commerce platform. Our sales commission fee decreased by 68% to RMB 10.7 million from RMB 33.7 million for the first quarter of 2020 due to the decrease in the amount of merchandise credit transactions. Our total operating cost expenses also decreased by 97% to RMB 63.3 million from RMB 2 billion for the first quarter last year. Our cost of revenues decreased by 4.8% to RMB 91 million from RMB 95.6 million for the first quarter last year, primarily due to the decrease in funding costs associated with the on-balance sheet loan book business, partially offset by the increase in cost of goods sold related to Wanlimu e-commerce platform. Sales and marketing expenses decreased by 36% to RMB 37.6 million from RMB 58.8 million for the first quarter last year, primarily due to the decrease in third-party service fees and the marketing promotional expenses. General and administrative expenses decreased by 12.9% to RMB 66.7 million from RMB 76.6 million for the first quarter of 2020 as a result of the decrease in staff salaries. Research and development expenses decreased by 28.4% to RMB 39.2 million from RMB 54.7 million for the first quarter of 2020 as a result of the decrease in staff salaries. Our provision for receivables and other assets was a reversal of RMB 106.8 million compared to a loss of RMB 1.1 billion for the first quarter last year, mainly due to the decrease in past due on-balance sheet outstanding principal receivables compared to the first quarter last year. Our income from operations was RMB 464.8 million as compared to a loss of RMB 961.1 million for the first quarter of 2020. Our net income attributable to Qudian's shareholders was RMB 478.4 million or RMB 1.81 per diluted ADS. Our non-GAAP net income attributable to Qudian shareholders was RMB 488.3 million or RMB 1.85 per diluted ADS. With that, I will conclude my prepared remarks. We will now open the call to questions. Operator, please continue. Thanks, Annie.
Thank you. Yes, as a reminder, to ask a question, you need to press star 1 on your telephone. And to withdraw your question, please press the pound or hash key. And please stand by while we compile the Q&A roster. And for the benefit of all participants on today's call, if you wish to ask your question to management in Chinese, please immediately repeat your question in English. Once again, to ask a question, please press star 1 on your telephones. Yes. Thank you. First question is from the line of Jackie Zhuo of China Renaissance. Your line is open. Please go ahead.
谢谢管理层给我提问的机会也非常恭喜公司一季度一个亮丽的业绩。我这边2个问题想请教一下。第一个是关于我们的这个 credit business。那我们也看到了这个year to date 我们的这个风险的这个水平是持续在下降。那想请教一下管理层，我们之后的这个贷款余额的一个预期是怎么样的？ 然后另外我的理解就是我们现在的这个 on balance sheet 这块主要还是用的是这个委托贷款的这个模式。那这块之后会不会有一些这个监管的这个压力？那我们会不会考虑说去换到一个持牌的这样的模式去进行这个 credit business？ 那第二个问题是关于我们的这个新业务万里木 Kit。那就是刚才管理层也提到了说我们现在看到的这个厦门第一家的这个万里木 Kit， 其实现在的这个优异的模型是这个非常出色的。那也想这个请教一下管理层，目前能不能帮我们拆分一下目前的一个优异经济模型是怎么样的？然后刚才也提到了说我们未来会增加这块的一个这个投入因为我们有计划是向全国做一个扩张，那我们这个扩张的节奏以及投入的这个节奏会是怎么样的？So let me translate my questions. So thanks for taking my questions and congrats for the solid results. I have two questions. Number one is about our credit business. We observed that our risk level continue to decrease year to date. So just want to check what is our loan balance outlook for this year. And in terms of the credit business model, my understanding is we continue to use the entrusted lending model for our on-balance sheet loans. Do we see any regulatory pressure for this type of model? Are we planning to switch to let's say licensed lending, for example, using the micro loan license? And second question is about our new business, Wan Li Mu Kit. So just trying to understand the unit economics for this new business. Can you give us some details or breakdown? And also we mentioned we will increase the spending for this new business in terms of the nationwide expansion. So what will be the investment scale and pace going forward? Thank you.
Thank you, Jackie. I'm happy to see you on the call. So let me answer your questions one by one. Regarding our credit business, as we also observed that our D1 delinquency rates and as well as our vintage charts have been improving over the past quarters. But in the long-term future, we believe although the demand for small credit will always exist, however, in China, such demand in the long term, we believe will be highly likely served by large financial institutions as opposed to non-government backed technology companies like us. So the regulation risks in the sector should not be ignored, as we observe that the tones from regulators have been on the tightening side. So in our point of view, including things like interest rate cap, leverage restriction, information disclosure requirements, credit guarantee restrictions, etc. There were not many positive updates in the regulation in the first quarter or the second quarter. As such, we chose to maintain our prudent strategy, and which means we will maintain our similar credit assessment, rigorously credit assessment rules, and similar volumes. However, our loan balance for our loan book business will still be decreasing in the second quarter. With regard to the on-balance sheet loan channels from the entrusted loan model to other regulated models, licensed models, yes, we have already changed that to licensed trusts. So the risks pending the entrusted loan model is not with us. Regarding your second question on our UEs, we expect the UEs to be superior to that of many of other offline businesses. Although it is our company's policy not to give guidance since 2019, we surely will incur some capex for the renovation of activity centers and operational expenses for staff costs and rents. The unit economics, although I couldn't give out concrete guidance, I could help guide the market to think and make reference to other offline businesses. Our UE will be superior to many traditional education businesses, as we do not need to incur abnormally high user acquisition costs or high rents. And also, our UE could be a bit similar to that of offline catering business as well, just need to take out the large amount of food and consumable expenses of the offline catering business. So the UE will be very attractive. And with regards to our capex and the ramp-up speed, as we mentioned in the call and in our presentation, we currently have over 80 centers in the designing process and the renovation process. So we expect to do a big ramp-up and expansion nationwide this year. There will be certainly capex expenditures, but we expect in the steady state our UE will be very attractive. Thank you, Jackie.
Thank you, Cici. It's clear.
Thank you. Once again, for those who wish to ask a question, please press star 1 on your telephones and wait for your name to be announced. For your questions, please press star 1 on your telephone keypad. Our next question is from the line of Steve Chan of Haitong International. Please go ahead. The line is open.
是管理层给我提问的机会主要2个问题。第一个就是想了解一下因为现在好像刚才Cici说这个贷款的 balance 可能在2季度还是会往下走，那是不是代表从中期的角度来看的话咱们会慢慢的转从这个助贷也好或者贷款的业务慢慢转型到那个教育的business， 这个是第一个第二个就是想了解一下从会计的角度来看的话现在咱们的那个万里木的 kids 那块的收入还有这个支出是放在哪一个 item 里面未来比如说刚才提到可能要建大概80个新的中心的话，那未来有没有一个比如说2到3年为了在那个所谓的教育那边的生意的收入跟或者就是它的回报率大概会有多少的大概有没有一个目标是多少Let me translate it into English. I have 2 questions. First of all, I think Cici just mentioned about the loan balance of the credit business will likely to be reduced in Q2, and we will maintain a conservative approach in the credit business. So does that imply that in the medium term, Qudian are likely to gradually transform from a loan facilitation or credit lending business towards more like an education, early education company? That's the first question. And secondly, could you give us some, 2 sub-questions. One, from the accounting point of view, where did you put the revenue and expenses of Wanlimu Kids in the P&L account? And do you have any target revenue or target return for this business, say in 3 years' time? Thanks.
Thank you, Stephen. Happy to meet you over the line again. So let me address your questions one by one. First of all, our balance swapping and rate. So as a matter of fact, the unit economics of our credit business is still very profitable. You know, we charge at 36% annual interest rate, and our delinquency of our annualized delinquency default rates is less than 10%. So this business is still very lucrative. So as long as we're making profit on this business, we will keep a similar level of loan volume and similar level of risk assessment procedures. In the mid to long term, if from an investment point of view, as we assume Qudian is an investor who invests in both credit business and one kids business, if the payoff from one kids business is better than our cash credit business, we will allocate more resources into one kids business for sure. So, and from the regulatory standpoint, we believe the one kids quality education business is more safer from the regulatory point of view. Although it is still very small at the stage, we only have a full quarter of one school, one center only in the first center. So relating back to your second question, in accounting terms, our revenues and costs for the first one center is quite minimal, and it is inside the sales income as well as the cost of goods sold. In 2 to 3 years, the return on one kids business, we expect that the unit economics of this business after the ramp-up period will be very attractive. If we look at the offline catering business, the unit economics of net profits will be around 10% net profit margin. And for some other offline education business, the UE for net profit will be around 10 to 20%. So as we have experimented our strategy in our first and second school, we anticipate that the UE of our kids business will be superior to that of the offline catering and offline and traditional offline education business. Hope that answers your question. Thank you, Stephen.
Very clear. Thanks, Cici.
Thank you. For those who wish to ask a question, once again, please press *1 on your telephone keypad. For your questions, please press *1 and wait for your name to be announced. Once again, please press *1 on your telephones. Our next question is from the... Once again, please press *1 on your telephones. All right, thank you. There are no further questions now. I'd like to turn the call back over to the company for closing remarks. Please continue.
So thank you all once again for joining today's conference call. We warmly invite investors to visit us in Xiamen and very soon in other major cities in China as well. If you come here in person, you see our centers in person, I'm sure you'll be impressed by the new species of children's quality education that we're developing. And if you have any further questions, please don't hesitate to contact our IR team and visit our IR website. So thank you once again very much.
Thank you. This concludes the conference call. You may now disconnect your line. Thank you.